Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, August 20th. Firstly to the S&P 500, and here we see a very large black body candle today, strong selling in this market, and that follows the build of momentum from the previous day's trading, the extension of the size of that black body candle. There was a possibility of support coming in at the top of this highlighted zone, and as we'd seen previously, but today the sellers, strongly controlled, strongly committed, have taken out the bottom of this yellow zone at 2040. That suggests that with the sellers are the strongest that we've seen for quite some time in this market, stronger than they have been since the early part of this year. Now previously we had seen that area breached, and the last few times when we'd seen that area breached to the downside, we saw strong support coming in at the 2000 round number level, but also within the Ichimoku cloud. It's slightly different this time because the market is now trading down below the cloud. We're not going to have that cloud support below where we're trading at the moment, although we may have the round number 2000 support. Now, if the sellers are strong enough to trade down to that level, that will be a very, very important level. And before we reach there, we also have the 2019 area. What we need to see here, if we are going to see the market test down to 2019 or to 2000, would be some strong negative follow through. A lot depends on how the market reacts for the next trading session. If we see indecision enter the market, we could see the buyers come back into the market and trade back up to within the zone. So a lot really depends on the next day's trading. And just looking at the bands here with the S&P 500, and here we've seen the bearish breakout down below the lower band. What we're looking for is strong bearish follow through to confirm the strong negative bias in this market. We had something of a squeeze going on prior to this price activity, and now we see the band starting to come apart, and that highlights the strong volatility that we're seeing in the market manifesting itself here potentially as strong downtrending price action. Importantly, we've taken out this swing low and the previous one back here in March from this year. Moving next to the Dow 30, and as you recall, what we've been watching here with the Dow is that it's a much more advanced market than the other indices that we've been looking at. It has been trending down quite significantly below the Ichimoku cloud, forming a series of lower peaks and lower troughs, and this was the one that told us that perhaps all really wasn't healthy with the overall equities markets, that there was potential for some downside. Important support coming up here at 16978. The sellers have breached down through some previous support, 17151, 17074, and have tested just down below the 1700 round number. One thing to watch for with all of these markets, with these large candles, is that they are extreme days, and very often we don't tend to see strong follow through after these extreme days. The market needs to take a bit of a break. So there is a possibility of perhaps some buying coming in off this support level at 16978. But if that area is breached in a strong bearish manner, we could easily see the Dow trading down to 16805. Now just taking a quick look at the weekly chart here with the Dow 30, and we are now trading at a very important level for this week's trading, which hasn't completed trading yet, and we're testing just around the bottom of that Ichimoku cloud. Previously, for the week prior, we saw price rejection to the upside from within the cloud, from the 17151 level, and the market failing to close within the cloud. At the moment, we've traded all the way through to the lower level of the cloud, and this suggests that if we don't see some support coming in for the next day's trading, and if we do see the market close outside of that cloud in a bearish manner, it may suggest that the market is setting up for a new downtrend in the longer term time frame. Now if we look here previously, the last couple of times that the market tested to the Ichimoku cloud, we saw strong buying coming in. So there is a possibility of that occurring. This candle hasn't finished trading yet, and we could see some solid buying coming in tomorrow. Following the market testing around the Ichimoku cloud and bouncing off there in the past, we saw very strong buying immediately after that support was found. and it lasted for quite a few weeks, for at least a couple of months, and that next candle was a largish white body candle. So that's what we want to see for the next week's trading if the market doesn't break out to the downside below the Ichimoku cloud. Now, the other thing to look at here previously, and it was back in the year 2010, and that was the last time that the market did test down below the Ichimoku cloud in a bearish manner. What we didn't see was strong bearish follow-through. We actually saw the buyers come back into the market. So even if we do have a bearish close down below the bottom of the cloud, then it doesn't necessarily mean that we are going to see a strong long-term downtrend begin. If we see follow-through, if we see a bearish close down below the cloud for this week's trading, and then if we see strong bearish follow-through, then that would suggest that the market certainly is in a different situation than it was back here in 2010. But just going back here to 2007, when we saw the other breach down below the Ichimoku cloud, we saw the strong breakout, we saw a rally, but then we saw the cloud starting to hold as resistance. We saw the market sell off again, rally to the bottom of the cloud, and then sell off strongly, taking out the troughs here that were established on the breakout. So we still have a way to go before there is any suggestion that we are going to see a major bear market, as we saw then with the market trading down to 6.469. But the market certainly may be setting up for it, but there still may be some time for this to play out. Now, just looking at the bands here with the Dow 30, and very, very different trading than we've seen with the S&P. This market has been trading down below the lower band and below the middle of the bands too, with the middle of the band holding as resistance previously. The bearish breakout down below from yesterday's trading and the strong bearish follow-through taking out the swing lows down here suggests that we do have a very strong negative bias in the medium-term time frame. Moving next to the Nasdaq 100, and here we've seen the Nasdaq take out this window that was open up about a month or so ago. Previously we saw the market testing down to the window about a week and a half ago, and the buyers coming in off there quite solidly. Today we've closed the window very strongly with a very negative candle. We've also taken out some important support. We've taken out 4482 in the bottom of a small highlighted zone at 4421, but we've also breached into another zone of support that extends roughly down to about the 4347 level. And we can see here previously, the last time we tested down to there, we did see strong buying coming in, and off that level we saw establishment of that very important window that held for quite some time. So there is still a possibility of some strong buying coming in down to this 4347 level. Just looking at the candle today around the highs, a window was established, so we have a little bit stronger resistance up around the 44.83 if the buyers do trade up to that area. But what we also saw was the Tenkan Sen holding as resistance, very strong rejection of the Tenkan Sen indicator, and that tends to happen when we have very strong negative downside momentum in the short-term time frame. So this is suggesting that we certainly could see the market test down to 43.47. That's not guaranteed, however. We still could see some buying coming in, or some indecision into the market over the next day or so. This is something of an extreme candle. This candle is very much larger than all of those that we're looking here on this chart, and what we tend to see is the market relax after we see these very strongly negative candles. Now, just having a look at our ETFs, the asset class ETFs, and trying to see where we've seen capital flowing to, and just looking at the Vanguard FTSE All World Equities ETF, and that's without the US, and here we see strong downtrending price activity, sellers in control, very large black body candle. But in terms of relative performance against the SPY ETF, the S&P 500, the US equities ETF, we see that it's very strongly underperforming. So we haven't seen any flow of capital from US equities markets into other equities markets other than the world other than the US equities market, or away from US equities into other equities markets. We see momentum of the relative strength trending down very, very strongly and down below the 100% level, and we've seen volatility start to increase from a cyclical low, and suggesting that we could see further downside in this ETF. Next, looking at the gold ETF, and obviously we're seeing capital flows into gold here, and safe haven status away from the equities markets that some may perceive to be quite risky at the moment. A gap up here in this ETF, GLD is the code. This ETF may find some strong resistance at the bottom of the Ichimoku cloud, so this flow of capital here could be short-lived. If we do see it come off, looking to support to come in at the Tenkan-sen at 107.76, and a negative breach down below there could see the market trade to lower levels. If the buyers are strong enough, and if they can breach out through the top of the Ichimoku cloud, we then could see some decent price appreciation. Looking at the momentum of the relative strength comparative, we've seen that ticking up quite strongly, up above the 100% level now, and we're seeing the relative strength comparative itself performing very, very strongly, so strongly outperforming the US equities market, and volatility is moving up off a cyclical low and suggesting that we could see further upside in gold. Next to VNQ, which is the Vanguard REIT ETF, the real estate asset class, and here we see the market trading outside of the Ichimoku cloud. We were waiting for the breakout. We've seen that. We've seen strong follow through. The market has retraced over the last few days and may find some strong support at the Tenkan-sen at around 79.51. There is an opportunity here for the buyers to come into this market, so we'll see what happens over the next few days. Strongly outperforming the equities market in terms of performance here, strongly trending up above that upper band, and momentum of relative performance is trending up and up above the 100% level. And next to TLT, which is the Barclays 20 plus year Treasury Bond Fund, and here we see strong bullish activity, a bullish candle following the market testing just below the Tenkan-sen indicator, an uptrend in the medium term time frame based on a series of higher peaks and higher troughs, trading up above the Ichimoku cloud with a long term bullish bias, and suggesting that there is potential for the market to trade higher. In terms of relative strength, strongly outperforming the overall market. Looking at momentum of relative strength, however, not looking as healthy as we'd like. Trading up above the 100% level, and just near that upper band. If we do see some buying continue in this market, we could then see that momentum trade higher. Looking at volatility, volatility is at a cyclical low, and it is starting to tick up, but we need it to trade up outside of that upper band and to perform strongly, so still no guarantee that we are going to see strong allocation away from equities into the bonds, although we are seeing it, but it could be stronger if we do see that trend start to perform in a more robust manner. And just looking at the utility sector here, XLU is the code, and here we see strong performance up above each of the Ichimoku indicators. Today's candle, we've seen some selling coming in. If we do see the market come off over the next day or so, potential support at the Tenkan-sen 45.12, and then we could see the buyers bounce off that level. In terms of relative strength, a strong outperformer against the overall equities, so we've seen a reallocation towards the utility sector. Momentum of relative strength comparative is trending up very strongly and up above the 100% level. The trend has been, in terms of volatility, has been moving higher, but we may have formed something of a cyclical high here, so just watching for volatility to come off, and that could happen if we see the market just start to trend down. But the benchmark here is going to be the Tenkan-sen indicator at 45.12.